Good morning, everyone, and welcome to this new edition of the morning briefing. All right, let's get started with yesterday. In short, in the evening there was the form, and Powell's words reflect a bit of uncertainty, but they have somewhat reassured the markets regarding inflationary pressures, which he considers temporary. So this leaves us with good hopes. The operators, obviously, and looking ahead to economic growth, albeit moderate. In short, and with all the issues concerning the unemployment component. Words that left him a bit on standby, they didn't add anything new. As for the dot plot, it has dropped a little, so everything is in line. With what they are, with what the expectations were for this event. So basically the situation remains the same. And the markets have started to benefit a bit. There was a nice push. Yesterday, let's take a look at it. This is the NASDAQ. Just a moment. I want to remove at least this so we can see it better with just the daily levels. Wait just a moment. I was saying this is the NASDAQ. So yesterday, in short, in the evening, there was a bullish push, a bit strange. A little bit, in short, it closed more or less on yesterday's HVS level. And so then during the night, it picked up a little bit. A path is now working below the red D1, so there's a potential bias. So it's bullish this morning. We're working at the level of levels within the range of BC3 levels, as you can see. Probably, in short, the trend is a bit upward. This area between 150 and 200 is definitely an important resistance area. So this is the area to watch for any breakouts. Upward that can drive prices. In the area where there's another resistance area, I mean 24.25 that we've pointed out several times, so keep an eye on these levels. But the push seems to be a recovery. We'll see if it then will find strength and volume to continue the path taken. Let's take a look at the situation. It's somewhat similar, if not even a bit more vigorous. Here, 56.70. The level, it's an absolutely crucial level for the future 5, which we can translate to 56.16, 56.15 for SPX. Crucial level, in short, where the market has leaned many times, in short, broken. This could definitely lead to another bearish push, but you know, at the moment, the situation like for the NASDAQ seems to be more vigorous. So the markets are recovering, even though, no, not excessively, but the recovery. In short, the rebound that we have witnessed is underway. In short, starting from the minimal facts recorded on Friday last week, nope. In short, they then gave breathing room to the market that's recovering ground. We'll see if it becomes a more consistent push. It will become a more consistent push. Let's take a look at the other two indices finally. The Russell, as I've pointed out several times, it's starting to slightly outperform the others. After that, we'll look at it with the Kamba. Let's start with the Dow Jones. Dow Jones, which, also yesterday, it had a nice push. We are close to the RD1 levels. Here too, in short, there is a range that we can identify at this moment between HW and RD1. So they will probably work this until the opening of the American markets, which I remind you that I live in Italy. It's 9:53 right now in Italy while I'm recording this video. So probably a breakout of RD1 could definitely, because the level to pass. So I had pointed this out, we're working on it. So only a potential return below this level could give bearish pushes, but conversely to the upside, like with the other indices. As we have said so far, in short, a bit of upward momentum seems to have returned, but well, I repeat, we don't have to plan. these are our trades based on that, but we just need to watch what happens at the moment we're about to make a move. Let's say that this is what I provide you with in the morning briefing. It's a bit of a background overview of the current situation. As I was saying, let's move on to Russell. Yesterday it had a nice performance. So we're going to see this nice gap here with a lot of volume. You see how it is. The others have retraced in this downward movement while it has held up nicely higher. So following just a bit of what Powell said, so with no maneuvers aimed at increasing taxes. So this will definitely benefit small and medium-sized American businesses. That's why Russell was my favorite, because I was expecting just this type of scenario from Powell. And so certainly, the companies that most will benefit from this situation are, in my opinion, small and medium-sized businesses. So are you monitoring it? I'm monitoring it closely. The Russell, a bit like my canary in the coal mine, it's what I think gives the best indications about the state of the economy. American compared to the S&P and NASDAQ, which have within them, in short, companies that account for 90%. So, in total. So they become a little, not very significant for let's say, for the expression of such a large sample like the American economy. This, well, is my opinion. So this for the Russell. Let's take a look at the DAX a bit here too, as we expected, in the sense that it was a little bit a buy. The rumors, sell the news. The news, well, about the expansion of spending brought some initial benefits, but then the market, as you can see, also this morning, well, it started off lower. I remind you that today it becomes front contract. So the June contract also applies to European stock contracts. I haven't updated the strip yet, because can we work on it? Until today, but starting tomorrow, of course, we'll switch to the June contract, which will roll with about 253 points upward. This is because on the DAX, dividends are not paid out, unlike other European indices where you can see some resources. In short, of the rollover, well, it's a downward trend, even though there's a cost to the carry trade high. But on the other indices, well, the dividend payout from the stocks weighs in, which is not then incorporated into the index. Well, just a bit of technicality to enrich our cultural baggage a little bit. That said, let's move on to oil. Oil, which yesterday, well, it did. So it made a nice little drop, probably due to the inventories. He doesn't know that in particular, but probably so. It followed that wave. It hit the lows of this region that we're following and have pointed out multiple times, except for this particular area. So this was the area of our interest taken. So with SD2, well, I pointed out the price yesterday. Now, it's working above RD1. We'll see. In short, if it finds strength. So maybe we can go back and retest the upper part, and continue to move, because probably, they're waiting a little bit of updates. In short, related to peace situations, and so on, we'll see, the developments later. Let's also take a look at how we usually do it. So at the moment, well, I've made this 5-minute chart. So obviously this double top might have already exhausted itself. It could dip a little lower, but it's definitely remained strong. So there was this range breakout yesterday. So with this new high made at $3,065. After that, the price, well, pulled back. In short, leaning on, let's say, the base of the accumulation range that had broken. This is probably a test of the area to then, start moving upwards. We'll also see the developments here, the chart. I'm not going to show you again the one from the man period, that I posted the day before yesterday in the chat. So you have it there available. For SPX, but I mentioned earlier, the level to monitor. at the moment. This is a 4-hour chart. Fang 6, and 16. This is the level to monitor, and 16. This is the area to keep an eye on. A breakout of this area could definitely give a third push. Bearish. There's the recovery of this point here, so it's 70, above 56.70. If it works on it, it could also, take the lead on a broader recovery movement and maybe test this area. Here it's 888 and 3 times 28.30. We'll see, the developments. In short, if the situation is bad, things are bad. There are many, if Paulo tells us that there's uncertainty, then, they definitely have more tools at their disposal than we do. Just imagine how much our uncertainty could be. So we're navigating by sight. Maximum caution. Today, there aren't any particularly important data. So there it is. Home sales. In short, however, I don't think they can cause any particular upheavals. The highlight of the week, probably in terms of macro data, was yesterday. So after this, we'll see. Now, how will the market process all of this, and what will the outlook be for the next few days? With this, I've reached the end. As always, I invite you to leave me a like on the videos on social media, both on YouTube, follow me on Patreon, and on X. We'll catch up later in the chat. Thanks everyone for your attention.